I've done many videos on PayPal. I started getting bullish on it when it went to $67, $68. I said it looks pretty undervalued. And since then, it has been down so far. It's down another 9% today on earnings. And my main thesis was that we will potentially have some kind of a change in sentiment once we get a new CEO in place. You have a new face for the company, a new plan, something different. And this is critical if you want stocks with bad sentiment to bottom like PayPal. And so far, this hasn't happened yet. PayPal is down another 9%. I think earnings were not bad at all, but I saw some things I want to highlight within earnings and tell you why I believe the stock has been going down so much recently. And this is mainly because of one big mistake that the CEO made. And if you remember this post when he went on CNBC and he said, "We will shock the world." And this was a massive mistake because he set extremely high expectations. And as you know, in the market, it's not just about earnings, it's about the expectations of those earnings. This is why people, stocks beat, they miss, they do all kind of things, and it's all based off expectations. So in my opinion, the CEO set extremely high expectations. He could not meet them on the latest presentation, whatever they had. He did not shock the world at all with some cashback stuff and other things, which I believe they were a good idea, but it wasn't something shocking. And it's the same on the earnings report recently. He hasn't shocked the world either. And a lot of the analysts, they had revised their EPS per share upward and they didn't meet it in terms of guidance. So this is the biggest mistake he made. He set extremely high expectations. Now, I personally believe the way I looked at the report, I think he's trying to now correct his mistake by setting low expectations so he can easily beat on them. And this is something that a lot of companies do, something like Hims and Hers Health. Is the CEO of Hims. He's very smart. This is what he does. He gives guidance, he just always gives it very low. And then he beats it. He looks like a genius. SoFi CEO does it sometimes too. These are pretty smart people. And maybe he's trying to do the same. So I hope I'm right on it and we're going to see what happens. But in terms of earnings, they were not bad. $1.48 versus $1.36 expected. Revenues, 8.3 billion versus 7.8. They were not bad at all. But one thing that a lot of people are freaking about is mainly the active accounts. Active accounts have been declining. They peaked at 435, then 433, 431, 428, now at 426. So they have been steadily declining, and they declined 2% recently, which is high, and this is concerning to a lot of people, and I agree with you. But if you look at the monthly active accounts, which in my opinion, they are more important because these are the accounts that are really active consistently on PayPal. They went from 215 to 217, 218, now 224. They've been steadily growing 1%. Now, to me, this is much better than me looking at active accounts. Something else that I think is more important than both is mainly the transactions per active accounts, how often and how many times people are using PayPal. Well, it went from 42.2 to now 58.7. It has been steadily increasing 7%, 11%, 10 to 11% per year. Now, in my opinion, these two metrics are way more important than the total active accounts that, they don't use it on a monthly basis or not how often they use it. So I'm not really too concerned about the active accounts declining. I would like to see them growing, of course. But if active accounts were declining and monthly accounts were declining and people are not using PayPal as many times as they used to, they're using it less, then I would be very concerned about where PayPal is heading. Now, in terms of everything else, revenues did increase on the quarter, wasn't too bad. Non-GAAP EPS, massive increase on the quarter, pretty good. Something that I'm, kind of excited about is the non-GAAP operating income and margins. Margins have been declining a little bit and they've been struggling. It was a massive bump in Q4 of 2023. I don't know if this is sustainable or not. I hope it's sustainable. But for me, looking at this amazing quarter, which I think it was a pretty good quarter, especially if you compare it to Q4 of 2022. Very good quarter in general. Now, to me, it just doesn't justify such low guidance from the CEO, other than he's trying to set very low expectations so he could beat on it. This is the only thing that I can come up with. And in terms of guidance, his guidance is around $5.10 of non-GAAP EPS for 2024, which I believe is pretty much flat from 2023. Now, the analysts were expecting $5.48, and $5.10 is around 8.7% less than what they were expecting of $5.48. Again, it's all about expectations. This is much lower than they were expecting. And, which, I mean, we're going to have to wait and see if this is what he's trying to do. He's trying to beat on it, set low expectations, or maybe PayPal has seen some slowdown in January and February, and he's issuing some kind of conservative guidance. So we will have to see. Now, a lot of people use free cash flow to value PayPal. They say, oh, the free cash flow yield is so high. Well, I'm not really a big fan of just using free cash flow, because if you look at the massive stock-based compensation for PayPal, I mean, it has been declining in 2022, which I liked, but then it started increasing recently, and it's been increasing every single quarter, and it's heading to the highs what it was in 2021. Now, in terms of a percentage of free cash flow, it's pretty close to 30-35% of free cash flow. This is very, very high. So I wouldn't really use free cash flow as a metric to value PayPal, even though the company uses it to buy back stock, and then the net shares outstanding are going down. I'm going to show you that a little bit. So, but I just won't like to use free cash flow. But in terms of EPS, $5.10, I think it's something pretty close to like 11 times earnings, or something like 12 times. Like it's something very, very low. So it's a very low multiple for PayPal. But again, this is not enough because of stock-based compensation, because non-GAAP EPS normalized includes stock-based compensation, and the estimate was 553. Now, if you exclude stock-based compensation, which I believe is a real expense, you get $4.02. So this is a massive, massive difference. And from the recent revision in EPS from expectations, I would say it will be like 370. Now, 370, this is, I mean, 17 times earnings, which in my opinion is still undervalued for a company that's not dying as people are saying. It's still expected to grow 6.5 to 7% on currency neutral. So it's not a declining company, and they have been buying back stocks. They have the cash to continue buying back stock. They have something pretty close to $14 billion of cash. The total long-term debt is around 9.6 billion, so they still have some cash. They have 5 billion of free cash flow with stock-based compensation, and they have been using them to buy back stock. Recently, they bought a lot of stock, around 5.10% year on year for September. But before that, they've been buying around 3.8%, 3.2%. So I would give around 4% of a buyback yield for PayPal every single year. And you have PayPal that's expected to grow around 7% with something like 4%. This is pretty close to an 11% return. And you still have the potential of more growth in the future. You still have, some kind of a multiple expansion if PayPal does pull it off, and you could have a reversion to the mean, which is why I believe PayPal is still undervalued. I'm a little bit upset from what the CEO did. I mean, I had better expectations. I saw PayPal would bottom a while ago, and so far it looks like it hasn't happened yet. But I mean, this is just my opinion on the stock. I still think it has some potential, and it's been heading in the right direction in terms of fundamentals. But again, I just want to see if the CEO is trying to do this so he could beat, or he's doing it because PayPal is really struggling in the first quarter of 2024. So this was my opinion on PayPal. It was not financial advice. I hope you enjoyed the video. So if you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.